So Nvidia stock has, of course, really shattered all expectations, rising by over 2,000% in the past 5 years and almost 20,000% in the past 10 years to now trading at an all-time high with a market cap above $2 trillion, which puts it only behind the giants Microsoft and Apple as now the third largest company in the entire world, even ahead of other giants like Meta, Google, and even Amazon. It's absolutely bananas. And so the question has naturally arisen, is Nvidia stock in a bubble now? And if so, is it likely to pop? Or is the company just so much on fire, especially with everything that they're doing in artificial intelligence, that the valuation is actually justified and the stock might actually be a buy? Well, as you guys know, I'm heavily invested in Nvidia stock myself. In fact, it's currently my second largest position in my portfolio after overtaking Tesla recently. Of course, you guys know that Tesla stock has really been falling at a time when Nvidia has only been skyrocketing. And so I'll be sharing my updated opinion on Nvidia from that standpoint as an actual shareholder myself. And I'll let you know if I plan to buy, hold, or even sell at today's really high prices, and what I would do if I also didn't already own the stock myself as well. So it's going to be a ton of fun. I hope you guys enjoy this one. Let's just go ahead and jump straight into it. All right, now first things first, why has the stock even risen by so much to begin with? Well, for one, the growth has been outstanding these past couple years, where since their fiscal 2020 up to last year, they saw revenues climb by nearly 6 times the amount. And by the end of this year, it'll be up around 10 times the amount. Guys, these are huge growth rates that we're talking about here, and it's why the stock has risen right along with their financials. Now, of course, the semiconductor industry can be a bit cyclical at times, and that's why you sometimes get 1 or 2 correction years during, down periods following explosive growth. But even then, I mean, you're only really talking about fiscal 2023 being about flat after growing by over 50% in each of 2021 and 2022, with a giant surge following of more than doubling in size last year, which is still expected to grow another 81% this year as well, before finally seeing a bigger, deceleration next year. But I'll talk more about their future potential in just a second. But all of this, by the way, is just looking at their sales, but profit growth has actually been even more dramatic. And just in the past year, their free cash flow skyrocketed by over 7 times the amount, while their gross margin also rose to a whopping 74% too. Now, of course, much of this is due to the sudden rise and importance of artificial intelligence, which most analysts and economists are predicting will have huge impacts on the global economy, like the chief US economist of T.S. Lombard, who said, AI is real, it's not a fad, and it'll absolutely change the economy over the next 3 to 6 years. In fact, some estimates are extremely high. PwC, for example, the second largest professional services network in the world, so they definitely know all about business. Well, in their most recent global AI study, their research showed a possible $15.7 trillion contribution to the global economy just from AI by 2030. To give you some context, that's more than the economic output of both China and India combined. It's absolutely crazy. And to add to that, McKinsey expects generative AI to enable as much as 70% automation of business activities across almost all occupations by 2032, which Goldman Sachs also thinks that there could be a significant disruption to the labor market, affecting as many as nearly 300 million jobs, with many of them just being flat out replaced by AI. So no matter how you slice it, the impact here will be absolutely gigantic. But how does Nvidia fit into all of this? Well, the supercomputers and the massive data centers that will process all of this data for AI and run all kinds of machine learning programs, and all the different robotics across all these sectors, they're all going to rely really on both high performance processing chips as well as robust AI software software and platforms, which Nvidia happens to be a specialist and a leader of pretty much all of these different aspects. For example, Nvidia develops the absolute best performing GPUs, which nobody has ever really argued with. I mean, AMD does do a great job of competing in their own ways, especially on price. But when it comes to performance, Nvidia has always really been the king. In fact, 75% of the top 500 most powerful supercomputers in the world actually run on Nvidia hardware and software, with also #1 market share in AI training and inference, and are used by all hyperscale and major cloud computing providers in the world, including over 40,000 different companies, which helped their data center revenues grow 16 times larger over the past 4 years. Nvidia also powered OpenAI's ChatGPT, and they have what is, in my opinion, one of the absolute best alternatives to Tesla's autonomous driving technology with their Nvidia Drive platform too, that already serves 20 of the top 30 EV makers, 7 of the top 10 truck makers, and 8 of the top 10 robotaxi makers, providing them all with technologies like their mapping platform, their Hyperion AV platform, intelligent assistants, and of course the chips and computers that power it all, like the current Orin and upcoming Thor SoCs that carry tremendous power and capabilities for level 5 fully autonomous driving. But it doesn't even stop there. In gaming, Nvidia GeForce is the largest gaming platform in the world with over 200 million gamers, where they also hold #1 market share in GPUs, with 100% of the 15 most popular GPUs on Steam coming from Nvidia. There's also huge potential in smart cities and the metaverse, which are expected to be worth many trillions of dollars as well. And Nvidia has already created several platforms for them, including their Omniverse platform that will be huge for industrial and enterprise work as well. And already Nvidia commands 95% market share in graphics for workstations and has partnered with other giants like Meta and Microsoft to work on even more metaverse projects too. Because of all this, in JP Morgan's AI research report last year, they projected that Nvidia could be able to capture as much as 60% of all AI related revenue. It's huge. And when you combine all these different markets, Nvidia is just as optimistic about their future too, projecting a $1 trillion long-term addressable market. For context, that's around 17 times the sales that they did in all of last year. In other words, the sky is really the limit here for Nvidia in terms of what they're already doing right now and what they still have yet to do in the future. So overall, we have really a stock here that skyrocketed, of course, by an unbelievable amount, but also one that has a ton of growth in the business to perhaps justify much of it. And so what I think this will really have to ultimately come down to is that valuation. How expensive is the stock in relation to that strong business performance? Well, let's take a look at that valuation, then I'll finish up with my overall conclusion right after. Now, considering the huge run-up, you would expect Nvidia's valuation to just be astronomically expensive, right? Well, believe it or not, it's actually somehow still cheaper than the sector on a PEG ratio basis. And I'm not making this up, guys. You can go to Seeking Alpha yourself and see the numbers right there. Nvidia's PEG ratio is almost 50% cheaper than the sector median. It's pretty crazy, and it's probably because of just how much growth everyone is expecting from them, since a PEG ratio, of course, uses several years of forward-looking earnings. Now, granted, their PE ratios are a bit higher, but also when compared to their own 5-year average, again, this is in the context of the stock skyrocketing in price over the past 5 years, well, here too, it's somehow actually still cheaper with a forward PE ratio that is around 20 to 40% lower and a PEG ratio that is over 50% cheaper too. I mean, I don't really understand how that's even possible. I think there's got to be at least some overestimating here from analysts on just how much their profits will grow in the coming years. But to be like 50% cheaper on a PEG, I mean, even if they fall short of those expectations, 50% is a pretty big cushion there for Nvidia stock to still be relatively attractive even at today's higher prices. And because of that, I just can't really bring myself to call Nvidia stock a bubble. I know I sound crazy. It's a $2 trillion market cap company here. It's even valued higher than Google and Amazon at this point. So how could I not think of it as being in a bubble? But I just think that they still have so much growth potential that it kind of helps alleviate some of that pressure. And so instead of calling it a bubble, I think I would rather just call it something like priced to perfection, meaning that they can't really make many mistakes from here, and significant ones would probably crash the stock. Not to mention that if the market were to tumble itself, it would definitely drag Nvidia stock down with it too. I would have to imagine that Nvidia would take a pretty big hit there. But overall, just looking at the long-term picture, it's still a stock that I want to be holding on to, and one that I'm not planning to sell out of, at least not anytime soon. In fact, I wouldn't be surprised if I actually end up holding Nvidia stock all the way up to retirement. But am I buying more of this stock right now when I'm already up 1,700% on my M1 position and another 600% on my Robinhood position? No, I'm definitely not. It's just a hold for me right now because I just don't want to be overly exposed to it. And even right now, I wasn't really planning on having Nvidia be my second largest stock in my portfolio. So, if it were to keep getting larger like this, I might actually trim some of it too, because I generally think that it's always okay to lock in some huge profits when you see one of your stocks just soar by such a huge amount like this. And so I wouldn't really be opposed to that. But as of right now, I'm just kind of planning to hold it. Now, if I didn't already own Nvidia stock, well, I would probably consider buying a small amount. I know it sounds a little crazy, but even after the run up, I think I would want just a tiny little piece, probably less than like 1% of my portfolio, just so that, if it were to drop, then it wouldn't have a major impact on my portfolio because I'd have such a small amount. And then I'd be able to just kind of sleep better at night knowing that I do at least own some Nvidia stock, and I would still want it to crash from there, because that would mean that I'd be able to buy a lot more of it at lower prices, which I think is kind of the safest or stress-free way of playing it at this point if I had already missed out on this huge run, rather than, tossing and turning every night wondering, did I miss the boat? Why is it so high? Is it going to climb even higher in the future, or is it going to crash? I don't have to really worry about all of that. This way, I would at least own a little piece of it, and I would have the option to buy a lot more in the future if it happens to go down. It's done, simple, wouldn't have to worry about it. That's what I would do. But hey, what do you all think? I would love to hear your thoughts down below in the comments section. Do you agree or disagree with anything I said today? And yeah, let me know how you're playing this. If you own any Nvidia stock, are you making any moves with it? I'd love to hear your thoughts down below and what you're doing. But thanks again for stopping by, my friends. I hope that you are all doing well, and I will catch you in the next video. Good luck with whatever decisions you make. I'll catch you next time, guys. Take care. Bye-bye.